Good evening, everyone. So last class we have studied about the law valid contract and its essential elements. So today we will discuss about what other types of contracts are there. So in block 3 you will see that other types of contracts are explained here. So starting with indemnity and guarantee. So what is that contract of indemnity? So as per the definition given here, you can see as per the Indian Contract Act, section 124, it explains that a contract by which one party promises to save the other from loss caused to him by the conduct of the promisor himself or by the conduct of any other person is called a contract of indemnity. Okay. So here, let me explain you this statement. If suppose two parties are there, A and B, they have entered into contract. So A has contracted to B, but here third party C will come and C will tell that whatever loss will be caused to B, I will be liable for that. I will promise that I will pay the loss for B. So here it is a contract of indemnity. If you are not clear, here you see one example here itself it is given that for example, A contracts to indemnify B against the consequences of any proceeding which C makes take against B in respect of certain sum of money. This is a contract of indemnity. Here A is the indemnifier and B is the indemnified. Okay, so here A is contracting to indemnify B. That means A is covering B. A is covering B for what? If B losses in future. So all the loss will be covered by A. It is told that. Okay, so here two parties will be there. First is indemnifier, the person who will promise to compensate for the loss. Here in this example, A is the indemnifier because A is promising to B that I will cover or I will compensate the loss if you will incur that. And second party is that indemnity holder or indemnified, the person whose loss will be made good or whose loss will be covered. Here in this example, B is the indemnified. Okay. So here, now basically this type of contracts are arising when insurance companies are there. Okay, except the life insurance company. If suppose any other contract, see, that is any accidents are there, fire, perils of sea, any type of insurance is there. So that type of insurance, if suppose loss is occurred, so a third party will be coming and indemnifying the contract of a particular person. Okay. So in simple language, just understand that here two parties already entered into contract, but here third party will come to incur the loss of one party. Okay. So rights of indemnity holder, what are those? Here you can see as per the section 125, there are some rights of indemnity holder. He is entitled to recover all damages. He is entitled to recover from the indemnifier all costs. He is entitled to recover from the indemnifier all the amounts. Okay. Then commencement of indemnifier's liability. So liability if suppose it is incurred. Now here indemnity is not necessarily given by repayment after payment. Okay. If already payment is done, there is no chance of repayment. Okay. So indemnity requires that the party to be indemnified shall never be called upon to pay. If it is paid, already paid for the indemnity, then no repayment is there. Then another one is contract of guarantee. Usually you can see the example of loan
which is taken from bank, there is a guarantor. You might be knowing that. That means that person is giving guarantee that the one who will take the loan, if that loan is not able to be recovered, then the guarantor will be liable to pay that loan. Okay, in simple language. So what does this contract of guarantee says according to Indian Contract Act? See, according to section 126 of the Contract Act, a contract of guarantee is a contract to perform the promise or discharge the liability of a third person in case of his default. Okay, then the person who gives the guarantee is called the surety, and the person in respect of whose default the guarantee is given is called the principal debtor, and the person to whom the guarantee is given is called the creditor. So here you will see three parties are there. In previous indemnity contract of indemnity, basically two parties are there. Two parties are involved in this contract. Okay, but here three parties are there. One is surety, the one who will take the guarantee, and on whom the guarantee is taken, that is principal debtor, and the one to whom guarantee is given, that is creditor. Okay, so you can easily understand by the example of loan taken from the bank. Okay, then here you will see that according to section 142, what does it say? You see here, provides that any guarantee which has been obtained by means of misrepresentation made by the creditor or with his knowledge and assent concerning a material part of the transaction is invalid. If suppose some facts are unknown, so according to this act, it will be invalid. Okay. So then again, according to section 143, any guarantee which the creditor has obtained by means of keeping silence to material circumstances is invalid. Okay. So anything which is unknown to the guarantor or the or any party, that will be invalid. Here you can see one example is there. For example, A employs B as clerk to collect money from him for him, sorry. B fails to account for some of his receipt. B has failed to collect some of the receipts, and A, in consequence, call upon B to furnish security for his duly account. Okay. Now A is just summoning B that whatever collection you have not done, just you you just give it all the money, you just recover that money. Then here you see C gives the guarantee. Now third party comes, C gives the guarantee for B's duly accounting. Whatever B has not able to collect the amount, it will be liable to C. A did not inform C about B's previous conduct. Now B afterwards make default. Here the guarantee given by C is invalid. Why it is invalid? Because B has misconducted here and C is unknown to that fact. Okay, so the guarantee given by C is invalid because it was obtained by concealment of facts by A. Okay, because there was no information about the misconduct of B. That is why this is invalid. Okay, then what is the difference between contract of indemnity and contract of guarantee? Here it is given through it, difference between contract of indemnity and contract of guarantee. Then come to extent of surety's liability. Okay, extent of surety's liability as per the section 128 of the Contract Act. What will be the surety's liability? You see, in the absence of a contract to contrary, the liability of surety is coextensive with that of the liability of the principal debtor. That means whatever the liability of the principal debtor, it will be the liability of the surety, the one who will take the guarantee. Okay. Example is given. You can go through it. Then come to condition precedent to liability. What is the condition? So as per the section 144 of the Indian Contract Act, it provides for such a situation that where a person gives a guarantee upon a contract that the creditor shall not act upon it until another person has joined in it as co-surety. Okay. So unless and until another person, if suppose it is not, that person has not joined as co-surety, the guarantee is not valid if that person does not join. Okay. So here, for example, you see, now here another co-surety means another person will be added here. Okay. Another co-guarantor will be there. So in that condition, for example, you see, if suppose you have a friend A who requires a loan of 10,000 from the bank, you and two of your friends C and D agree to guarantee the repayment of loan for A. Okay. But here you see, C does not sign the necessary documents. Out of your two friends, one of the friend has not signed the document. Here again, you and your friend D are also not liable on this guarantee. Okay. If one of your friend is denying for the guarantee, so other two friends also, that is other two person is also not liable for this guarantee because, okay, because it is a condition precedent to your guarantee that the repayment of loan shall be guaranteed by all the three. Okay. If suppose all the all three are ready to sign the contract or the signing as a guarantor. So here if any one of they will deny, then it will be invalid. Okay. Then there are various types of guarantees are there. So various types means only two types of guarantees here. That is specific guarantee and continuing guarantee. So specific guarantee, by the name itself, you can understand that for a specific purpose, it will be guaranteed, and continuing guarantee is a continuous process. Okay. So here you can see when a guarantee is given in a respect of a single debt or specific transaction, only one transaction, and is to come to an end when the guaranteed debt is paid or the promise is duly performed, it is called specific or simple guarantee. Then, on the other hand, a guarantee which extends to a series of transactions is called continuing guarantee. It is given under section 129. In this case, the surety's liability would continue till all the transactions are completed or till the guarantor revokes the guarantee as to the future transaction. Okay, so it will be a continuous process and the term of end is not known unless and until certain conditions or certain situation occurs. Some of the examples are given, go through it. All the examples are given. If one example is not understand, if you will not understand, then you can go through another examples also. Now, specific guarantee, there is no issue because once all the transaction is over for a specific purpose, then everything is over. Now for continuing guarantee, how it will end, or you can tell it as revocation of continuing guarantee. How it can be revoked, how it can be cancelled, or how it can be discontinued. Okay. So first of all, by notice of revocation. Okay. So for example, here you see how it can be discontinued by notice of revocation. For example, here itself you see A guarantees to B to the extent of 10,000 that C shall pay for all the goods bought by him during the next 3 months. Okay. B sells goods worth 6,000 to C. Now A gives a notice of revocation. C is liable for rupees 6,000. That means A is revoking, discontinuing to give guarantee. Okay. So C is liable for 6,000. If any goods are sold to C after the notice of revocation, A shall not be liable for that. After the revocation of the guarantee, continuing guarantee, the guarantor is not liable, guarantor or you can say surety is not liable for further any liabilities. Then this is by the notice. And next is by death of surety. Ultimately, if the death of surety is there, no further contract of guarantee will be there. Ultimately, it will be automatically it will be cancelled. Then, in the next case, in the same manner in which the surety is discharged. Okay, there are various sections under which the continuing guarantee can be revoked. Okay, so all these sections are there under that head. You go through it. Then, if suppose some person is taking guarantee, so that person has also some rights. So rights of surety, that is the rights of sureties are in three parts. Three rights are there under which sub rights are given below. So first of all, against the principal debtor. What is the right against the principal debtor? Then against the creditor, against the co-surety. So further, against the principal debtor, right of subrogation, right of indemnity. Similarly, against the creditor, right to scrutiny, security, and right to set off. Then against the co-sureties, right to contribution. Okay. So right of subrogation means here you see, as per the section 140, when a guaranteed debt has become due or default of the principal debtor to perform a guaranteed duty has taken place, the surety upon payment or performance of all that he is liable for is invested with all rights which the creditor had against the principal debtor. That means it is called subrogation. It means on payment of guaranteed debt or performance of the guaranteed duty, the surety steps into the shoes of creditor. That means whatever amount to be payable to person, that will be belong to surety. Then right of indemnity, that means if suppose a surety has indemnified to another person as a guarantor. Okay. Then right against the creditor, right to securities, right to set off, then right against co-sureties. Okay. So if any other person is another person become a surety, that is co-surety against which some rights are there of the surety. Go through the examples. Yes. Here you go through the rights also, because in exam it comes. Sometimes it comes, what are the rights of surety, what are the rights of the creditor. In that way question comes. Okay. Then discharge of surety from liability. Discharge of surety from liability, under which you see, by revocation by conduct of the creditor on invalidation of contract of guarantee. So by revocation, how it is discharged, you see, notice by surety, death of surety, novation. Okay, everything is given below with examples. Just I am reading out the points only. Then by conduct of the creditor, variance in terms of contract if some difference is there. Then arrangement between principal debtor and creditor. Then creditors act or omission impairing surety's eventual remedy. Then loss of security under the heading on invalidation of contract of guarantee. Here it is, guarantee obtained by misrepresentation, guarantee obtained by concealment, failure of co-surety to join surety. Okay, certain conditions are there which is explained with examples. Go through it, you will understand. Then come to next part, that is bailment and pledge. Okay, so what is bailment and pledge? So in question it comes difference between bailment and pledge also. Okay, in here I don't remember, but question came. So here, what is bailment? According to section 148, a bailment is the delivery of goods by one person to another for some purpose upon a contract, that they shall, when the purpose is accomplished, be returned or otherwise disposed of according to the directions of the person delivering them. Okay, so bailment is nothing but, for example, you see, if suppose you want to make some jewelry of gold, so you will give gold to the jeweler. So you will
instruct the jeweler that make this kind of or this design of. Okay, that means you have given the goods, you have given the goods to some person for some purpose. What is the purpose here? You have to make the ornament or the jewelry. Okay, so after a specific time period, you will go to that jeweler and you will ask for the ornament. Okay, after some period of time, and in exchange with that service you will give the money. So here it is the example of bailment. That means you are giving goods to some person for some specific purpose. Okay, either to make another good, or either to repair, or either to use it in exchange of money. Okay, so here one example is given, same example, that jeweler one. So if suppose you deliver some gold to a jeweler B to make bangles for your sister, in this case, you are bailer. Okay, you the person who will give the goods it is called bailer, and B is the bailee. The person to whom the goods are given is called bailee. And by delivering gold to B, a relationship of bailment is created between you and the jeweler. Take another example. If you give a piece of cloth to a tailor for stitching a shirt, here also a contract of bailment is created. Okay. Now there are four essentials of valid bailment. What are those? You see, there should be an agreement. Okay, there should be an agreement, and there should be delivery of goods. Delivery of goods, no bailment is created, and there should be a purpose for giving the goods, whether for converting into another finished good or whether to use it, any purpose. Then after that, last essential of valid availment is return of the specific goods. After purpose is over, after whatever work is to be done on that particular good, the goods has to be returned back. Okay, so four essentials to be remembered. Remember this with the example, with meaning and example. Then kinds of bailment. There are two kinds of bailment. One is on the basis of reward, that is gratuitous and non-gratuitous, and on the basis of benefit, that is for the exclusive benefit of the bailer, and for the exclusive benefit of the bailee, and for the mutual benefit of bailer and bailee. Now here itself you see that as per the guarantor, on the basis of reward, under that category gratuitous, here you will see there is no exchange of money, because if suppose if you are giving some goods to your friends, there does not exist any benefit, because the friend will use your book and it will return back by your friend. Okay, so here your friend is not giving money to you. Here, for using the goods, your friend will not give money, or you will not give money to that person. So here gratuitous without any benefit. Okay, and non-gratuitous is with benefit. If you are giving some clothes to tailor will make clothes for you, and for exchange of that clothes, you will give money to that. Okay, here non-gratuitous, that means it is of benefit. And on the basis of benefit, either there will be a benefit for bailer, or there will be benefit for bailee, or there will be a benefit for both bailer and bailee. Okay, which is explained just below that. Go through it. There are certain duties of bailer. Okay, so before giving goods to the bailee, okay, the person to whom you will give to the goods, give goods, what are the duties of the bailer? When you will give the goods, suppose when you will give clothes to the tailor, you have to explain what type of cloth is that. Is there any defect or whatever? So first duty is that duty to disclose defects. Okay. Then a duty to bear expenses, whatever expenses will be there. Okay. That expenses you will incur. Then duty to indemnify the bailee. Okay, indemnify the bailee. Here certain cases arises when you have to pay for the losses of the bailee. Okay, then duty to bear risk, whatever risk will be there for using the for that is processing the goods, you will bear the risk, not the bailee or the bailor, sorry. Then duty to receive back the goods. Now at last, if you have given the goods, if the bailor has given the goods, that means it is the duty of the bailor to return, get it back the goods. Then similarly, duties of bailies are also there. So bailee, what is that? What are their duties? You see, duty to take reasonable care of the goods bailed. Okay, if you are bailee, if suppose you act as a bailee, so if you will get some goods from the bailor, it is your duty to take care, proper care of the goods. Then, not to make any unauthorized use of goods. For a particular purpose, if goods are given, that means that purpose only should be fulfilled, not any other unauthorized purpose should be done. Then, duty not to mix bailor's good with his own goods. Okay, sometimes what happens, many of the tailors, for example, tailors or any jewelers, what they are doing, they are mixing bailor's goods with some other goods also. Okay, so here the duty of the bailee is that the bailee should not mix the goods with the other goods. Some examples are there. Examples are given to make you understand the concept. Okay, so if suppose any example is given in question, so if you are asked to find out that whether it is such type of condition or not, so if you will go through the examples, you will clearly understand the examples in questions and you will explain with the reason. Okay, then duty not to set up adverse title. Okay, then duty to return the goods. Here also same thing. Then duty to return accretions of the goods. Okay. So whatever accretions means whatever uses have been done with that goods. Then rights of bailor. In some cases, what are the rights of bailor? You will see here. So first right is that enforcement of bailey's duty. Then right to claim damages, right to avoid the contract, right to claim compensation, right to demand return of goods. In which conditions you have these such rights? Examples are given under that. Similarly, rights of bailee, right to claim damages, right to claim reimbursement, right to recover losses, right to deliver goods to any one of the joint bailers. Okay, if suppose your bailee has decided to deliver the goods through your relatives or your friends. Okay, then right to deliver the goods to bailor even if his title is defective. Then right of lien. Lien is retaining of goods. If suppose bailor is unable to collect the goods, the bailee has the right to keep or retain the goods. Okay. Then right of bailor and bailee against wrongdoings. Here some example is given. You see here. If suppose wrongdoer occurs, what are the rights of bailor and the bailee? It is explained here. Okay. Read it. Then finder of goods. Who is the finder of goods? Suppose a person while walking on the street got some good in bulk amount. Okay, so the person who got that goods which is unknown to any other person. Okay, that means the finder is unknown with the actual owner of the goods. In that condition, that person is known as finder of goods. Okay, so here if suppose one person has found the goods whose owner is unknown, so in right of lien, lien means again retaining of goods. You are keeping the goods with yourself unless and until you will find the real owner of the goods. Then return to sue for reward. Yes, here the finder can claim for the reward. Okay, claim for the reward for finding the goods. Then right of sale. If suppose for certain period of time or long period of time, no owner is there, no one is claiming for the goods. So right of finder is to sell the goods. Finder can sell the good. Okay. Then apart from
Apart from rights, here some duties are also there of the finder of goods. First duty, according to section 71, duty is that finder should take reasonable care of the goods found. Okay. Then he should not put the goods for personal use, and he should not mix goods found with his own goods. Okay. It is the duty of the finder of goods to find the real owner of the goods. Okay. So here you see in the contract of bailment, how it is terminated, you see, some points are there. On the expiry of fixed period, on the fulfillment of the object, inconsistent use of bail, destruction of subject matter, termination of gratuitous bailment. Okay. So contract of bailment can be terminated in that following way. Now, next come to pawn or pledge. Okay. So pledge is another type of bailed contract or bail contract. You can see it is a special kind of bailment where a movable thing is bailed as security for the payment of a debt or for the performance of a promise. Okay. So here any movable assets or movable thing is guaranteed or it kept as a security for the repayment of loan or repayment of any borrowed money. Okay. So here example is given. If you borrow rupees 100 from B and keep your cycle with him as security for payment, it is a contract of pledge. That means you are keeping some, in Hindi you can say girvi rakhna. Okay. So here the person taking loan is called the pledger or pawner, and the person with whom goods are pledged is called the pawnee. Okay. So two parties will be there after completion of certain period of time. The loan can be repaid and goods which you have kept as a guarantee or security that you can get back. Okay. Who may pledge? Who are the persons who may make a valid pledge? The owner or his authorized agent. Okay. Here the owner or authorized agent means the goods belong to a particular person can only keep that goods as a security. Okay. You cannot take your friend's cycle or your friend asset to keep as a surety. Okay. That is invalid. Then one of the several co-owners who is in the sole possession of goods while the consent of other owners. Then a mercantile agent who is in possession of the goods with the consent of real owner, or sometimes some agents are the owner of the goods. Then a person in possession under a voidable contract before the contract is rescinded. Then a seller who is in possession of goods after sale, or a buyer who has obtained possession of the goods before sale. Then a person who has limited interest in the property. Okay. Then pledge and bailment, how it is similar or how it is different, you see. Okay. Here in case of pledge, what they are doing, that some goods are kept as a surety. Okay. But and there is no guarantee or there is no surety that the goods will be returned back. If suppose you have if the person is unable to repay the loan, so that goods can be sold by the that is sold by the person who has taken the goods. Okay. But in bailment there is a compulsory that goods should be returned back after some period of time. Okay. The bailee cannot sell the goods. Okay. Then pledge and hypothecation, here you see. So here pledge you know, but hypothecation, you see what is that. In hypothecation the creditor has right to inspect the goods. Okay. The creditor has right. The creditor here means the person who will give the money or amount, inspect the goods at his convenience. Whereas in case of pledge, the pawner loses the possession of the property. Okay. Now once goods has been given to that person, in case of pledge, no right of no inspection of that property is allowed for the that is pawner. Okay. Then rights of pawnee. What are the rights of pony? That is right of retainer, then right to extraordinary expenses, then right to sale is also there, then right against the true honor of goods as per the section 178 is given, then rights and duties of the pawner, here right of pawner, duties of pawner, it is explained there, then pledge by non-owners. Okay, if suppose non-owners are there in case of pledge, so what will be that? You see, pledge by a mercantile agent, explanation you can go through it here. Okay, pledge by person in possession under voidable contract, then pledge where pledger has only a limited interest, then pledge by co-owner in possession, pledge by seller or buyer in possession. Okay, then contract of agency. Okay, here nothing but it is the contract which is made between the agency, or you can say it as agents. Okay, there are various types of agents are there. Agents in case of selling the goods, agents in case of purchasing the goods, and agents there are in stock broking. Okay, so as per the section 182 of the Contract Act, agent is explained as it is a person employed to do any act of another or represent another in dealings with third person. Okay, the person whom such act is done or who is represented is called the principal. Okay, so here agents are being assigned for conducting some acts or conducting some performance. Okay, so example that is who can appoint an agent, explained here under section 183, and against whom may be an agent, section 184 explains here. Whenever you are explaining the certain terms, kindly write the sections also. Okay, then consideration for agency, constitution and proof of agency, there should be a valid agency who will be providing the agents. Okay, now creation of agency, how it can be created: express agreement, imply agreement, ratification, and operation of law. Okay, under this condition agency can be created. Okay, now there are various types of agents are there, classification of agents. Okay, on the basis of extent of authority, then on the basis of nature of work, on the basis of extent of authority, and there is single or simple special agents are there on the basis of extent of authority, but on the basis of nature of work there are certain agents named as broker, factor, auctioneer, del creditor agent, commission agent, and banker. Okay, these type of agents are there on the basis of nature of work. So broker is working for the stock broking. Okay, and other goods, purchase and sales of goods. Okay, then factor, that person deals with the goods or merchandise to raise money. Auctioneer, you know, okay, जो that नीलामी, in Hindi you can say नीलामी जहाँ करते हैं, auctioneers. Del creditor agents, that means that agent will take the guarantee of the principal that whatever work it is being assigned to the agent, that they will complete it within a given period of time. Okay, with extra remuneration. Then commission agents are there, those who will take only those who will work only for the commission. Then bankers are there. Okay, then what are the scope and extent of authority? That means which extent it can be used. Okay, so ostensible or apparent authority, actual or real authority, authority in emergency or by necessary. It is explained here that delegation of authority by agent. Delegation of authority means you are assigning the duties. Okay, or agents are assigning the duties to its assistants. Okay, because sometimes a single agent is not able to perform the work in a various places, so that agent will assign some sub-agent, okay, or substitute the work to them, okay. Then same thing explained here, rights of an agent. So what are the rights of agent? Right to receive remuneration, okay. It is explained into section 219 and 220. Then right of retainer, explained in 217, section 217. Then right of lien, section 221. Then right to indemnified, then a right to compensation, okay. And in the same way, duties of an agents are there. So duty to act according to the instruction or custom of trade, then duty to act with reasonable care and skill, duty to render accounts, duty to communicate with principal, not to deal on his own account, then not to use information obtained in the course of agency against the principal, then not to set up adverse title, not to make secret profits, duty to exercise his authority personally, duty on the death or insanity of the principal. These are the duties, okay. And sometimes what happens, some personal liabilities are also arising during the work of agents, okay. So personal liability of an agents are explained here. What are those liabilities are there? It is explained. Go through it. Then liability of principal to third parties are also there. What are the expenses or what are the liabilities? Then termination of agency, in which condition an agency can be terminated, okay. So by act of the parties, and parties here it is included that by the principal, by agent, by agreement. Then by operation of law, here completion of business of agency, death or insanity of principal or agent, insolvency of principal, then supervising impossibility, that is destruction of subject matter, expiry of time, dissolution of company, principal becoming alien enemy. Alien enemy here means it is indifferent, okay. Everything is explained here. Then irrevocable agency, how it is revoked, okay, it is explained. Then it's over now. So next, partnership. You see, partnership is the easiest part. You can go through it. Just I'll explain you. Partnership, by the word itself, you can know that what is that partnership. So partnership here means if any two or more persons agree to conduct business and share the profit equally or any given ratios, that business is called partnership business, okay. So as per the section 4 of Indian Partnership Act, that is, it is the relationship between two or more persons who have agreed to share the profits of a business carried on by all or any of them acting by all, okay. So minimum 2% should be there, and maximum here you see, maximum in some cases it is 50 and in some cases here you see 100 it is given, okay. So as per the rule 10, companies should be companies should be 50%, okay. So if partnership extends from that 50, it will be illegal one. But as per the section 464 1 of 2000 Act, the 2013 Act, that means there is not greater than 100, okay. It is changed. Then some essential parts are here. You see, there should be agreement between persons, okay. If there is no agreement, that means there may be a rise of, that is a misunderstanding or misconduct also, okay. So in basically partnership is not necessary to register, but nowadays what happens, if a partnership is not registered, there are various adverse impact also there. So nowadays every business, whether it is small, medium or large business, every business is being registered. So it is now mandatory, not mandatory, it is necessitated for the partnership business to register. Okay, so agreement between person should be there, and there should be a particular business or a purpose, and every partner should have mentioned in the contract or mentioned in the agreement that which person should take what amount of profit. Sometimes in the absence of agreement, equally all the profit, whatever profit they will earn, it is equally divided among them. Okay, in that case sometimes disputes are being created. So in agreement it is mentioned that what amount of profit will be taken by a particular partners. Okay, so sharing of profit should be clearly mentioned in agreement. Then here, business carried on by all or any of them acting for all. That means here again there is no compulsory that all partners will work for the business. Okay, they should assign one person, one of the partner, to look after the business. Okay, that is the one of the situation is there. Then test of partnership. Test of a partnership is nothing but it is created only on the mutual understanding of the partners. Okay, if there is no mutual understanding between partners, there is no continuity of business. Then partnership and co-ownership, there is a difference. Okay, partnership business and co-ownership is a different one, and the difference is given here. You see, you can go through it. This is the difference between partnership and co-ownership. Then partnership and joint Hindu family. Partnership is different from joint Hindu family. Joint Hindu family, you might have heard Hindu undivided family. You might have heard HUF. So in case of Hindu joint Hindu family, the next generation, usually here son is being considered. Okay, nowadays the trend has changed, but in Hindu undivided family, next the son or any male member of that family is the owner of that business. Okay, is the head of that business. Then about the uh, partnership deed. Okay, so partnership deed is nothing but it is the content of the following terms. Name of the firm, starting with the name of the firm, all the contents are mentioned in the partnership deed. Partnership deed is nothing but an agreement. Okay, then how it is registered. So registration, earlier it was not mandatory or not compulsory, but with the current situations, partnership business also is registered. Okay, so what are the procedures of registrations are there? You can go through it. Terms are given. It is easy to understand. Okay, so as I was telling that it is not compulsory for the partnership business to register, but if it is not registered, what are the adverse effect? Okay, you can see the point that no suit can filed in civil court by a partner against the firm or the other partners. Okay, if suppose illegal conduct is done in the business, so no partner can legally or no partner can file a complaint in the court because it is not registered. Okay, so the benefit of registration is that only that they can sue or they can file complaint in court of law. Okay, in any situation arises in this way in case of misconduct. Okay, then there is a duration of partnership. So first is partnership at will. That means partnership can be continued till they agree. Okay, there is no particular specific time period that a partnership will conducted. That means whatever they will like to do or whichever time period they want to do, they can continue with the partnership. Then particular partnership for a particular or specific purpose. If the purpose is over, partnership is also over. Okay. Then partner, firm and firm's name. Here you can see here as per the section 4. Okay. Firm is only convenient phrase for describing the group of partner, but the firm has no legal existence. Okay, this part is important. It has no legal existence apart from the partners. It is not separate entity. Okay, sorry. So in case of partnership business, there is no separate legal entity. No separate legal entity means whatever partner will conduct, whatever the partner work is done, it is the ultimate work of the company. It is the ultimate work of the partnership. Every partner is liable. And that's why partners' liabilities are unlimited. Okay, in previous cases. Partners' liabilities are unlimited. Unlimited means their personal property can be taken into consideration for paying the liability of business. Okay, then types of partners are there. Active partner is there, sleeping or dormant partner, nominal partner, partner in profits only, then sub partner, partner by estoppel or holding out. Go through it, types of partners. Then position of minor. Okay, as you can know that minor is a person below 18 years of age. So minor can be also a partner, but minor is not allowed to take part in the partnership business. Okay, he can check, a minor can check the accounts of the partnership business, but he or she is not liable to conduct the business. Okay, but the minor has certain rights and certain duties also, and liabilities are minor is also there. Okay, then position on attaining majority, after he is major, then what duties or what he has the right. Okay, then come to rights, duties and liabilities of the partners. So there is a mutual relation of partnership. Rights of partners are there. Okay, what are their rights, duties, then property of the firm, basically, and then relationship of parties with the third parties, then implied authority of partner. So as I told that there is no separate legal entity. That means whatever act is done by the partner, it is the act of the firm ultimately. Okay. So that is explained further here, implied authority of a partner, then implied authority and third parties other than the partners. Okay. Then here positions of incoming and outgoing partners. Okay, throughout the partnership business, new partner can be entered. Okay, for that admission of new partners, certain terms and conditions are created, how their profit will be distributed when new partner will be joining, and in case of a partner which is retiring or in case of death of a partner, there are also certain rules and regulations or certain terms and conditions to be fulfilled for their repayment, for their payment of the amount of money or profit. Okay, then if partner is expelled, that means suspended, in that case also certain terms and conditions are there. And if any partner is declared insolvent, in that condition what are the rules and regulations? Okay, all are explained here. Death of the partner, then dissolution of partnership firm, how it is dissolved. It is dissolved by the conduct also, it is dissolved by the law also. Okay, it is dissolved by the act also. Okay, so here you can see how it can be dissolved. Okay, how it can be discontinued without the order of the court, in which case by mutual agreement, if suppose partner agrees to end the partnership, then compulsory dissolution, then on happening of certain contingency, that is contingency means, that means uncertainties. Okay, which may happen or which may not happen, then by notice also, then by the order of court, in which case or a court can order to dissolve the partnership, that is insanity, permanent incapacity, misconduct, persistence, breach of agreement, sorry, transfer of interest, perpetual losses. Perpetual losses mean continuous losses. Okay, any other just and equitable ground. All are explained just below. Okay, then consequences of dissolution of firm. Okay, what are the consequences? All you will go through it. Then liability of a partners, how the liabilities are being repaid or how they are being settled down while dissolution of the partners. Okay, how the accounts of partners are settled when dissolution occurs. Okay, how it is done. And last part you see, that is limited liability partnership. Okay. So earlier I told that every partner's liabilities are unlimited. Okay, that means their personal property can also be used for paying the liabilities of the business. But as per the Indian Partnership Act 2013, okay, here some changes are there. That is, in this case, the partner's liability can be limited up to unpaid capital. Okay, unpaid capital, that means the amount of share which is not paid. Up to that only the partner's liability is limited. Okay, so you can see, that is, what are the features you see? Limited liability partnership, what are their features? It is different from the, little bit different from the normal or usual partnership. Okay, who can be partner? Here it is given. Then liability of a designated partner, then incorporation of limited liability partnership, how it is incorporated, okay, in the court of law or in the legally how it is incorporated. So incorporation by registration, how it is registered, then effect of registration, if it is registered, what are the benefits of registration of limited liability partnership. Okay, then partners and their relations, then what is the difference between limited liability partnership and partnership, go through it. Difference between limited liability partnership and company, what is the difference? Okay, so that's all for today. So just go through the previous questions, okay, and just try to solve that, you will get the idea. Okay, thank you for today, thank you all. Okay.